What's going on, guys? Welcome back to another video. Today we're talking about a very interesting topic, one that's near and dear to my heart, and that is dividend investing. If you know me, or for those of you who don't know, I am a huge advocate of dividend investing. I think dividend investing is one of the best ways to accumulate wealth in the long term and to really set yourself up for a very lucrative and safe retirement. It is also a fantastic way to set yourself up for some kind of financial independence later on in life, and it's a great way to create passive income. For those of you who don't know dividend investing enough, or for those of you who know what dividend investing is and are not sold on it, this video is for you. In this video, we're going over the 5 reasons why you should start dividend investing today. Reason number 1, historically speaking, dividend stocks outperform the stock market during downturns. So this means that during stock market crashes, dividend paying stocks have been able to outperform the rest of the market. There are a number of reasons why this is the case. So dividend paying companies are often looked at differently by investors. One thing that investors look at when they look at dividend stocks is cash on hand, because cash on hand is necessary to pay off these dividends. So when other companies that are not performing very well, that don't pay dividends, hit a recession, they might use some accounting tricks to make their numbers look better than they actually are. However, when it comes to a dividend paying stock, you can't really fake how much cash you have on hand. You can't do some accounting gymnastics to really get around how much money you have on hand. So when a company has a lot of cash on hand, it's a very enticing investment for people in the stock market, people on Wall Street, so that they tend to outperform when other companies aren't doing as well. Another factor is these companies are very fiscally responsible. So these companies require to have very effective and efficient financial planning, because you have to be able to plan on how you're going to pay your dividends every quarter or sometimes every month. As a result, unlike non-dividend paying companies, dividend paying stocks use their free cash flow very wisely and only spend it on investments that are guaranteed to generate them more cash later down the line. This ensures that the company will be able to grow its dividend further in the future, and it makes sure that they're not spending their money rather stupidly just to spend it. Lastly, there's this thing called dividend yield support. So when a stock drops in value, its yield actually increases. That's because the formula for a yield is the cash dividend divided by the price of the stock. So if the cash dividend stays the same and the value of the stock falls, the yield goes up. So when the stock price falls down and the yield goes up, many investors are actually enticed to buy shares of that company simply because of the high yield that the company now has. As a result, this could prevent the stock from hitting a decline like the rest of the market does, or even allow it to rally and actually show a positive. As a result, I would argue that dividend stocks are more secure and more recession-proof than more volatile stocks that do not pay a dividend. And this goes into my second point on why you should start dividend investing. A lot of these stocks do not require a lot of research. A lot of the safest dividend-paying stocks are a lot of household names that everyone knows what they do, and everyone knows how powerful and big the companies are. AT&T, Target, Coca-Cola, Pepsi, Johnson & Johnson. All of these companies have been paying their dividend increasingly for 25 years. So it's all those companies are household names. I would argue that everyone watching this video knows pretty much all these companies listed, and it just makes you feel so much more secure investing in them. McDonald's and Walmart are 2 more examples of these kinds of stocks. Would you make a bet that in the next 10 years McDonald's or Walmart goes out of business? I sure wouldn't. And just that factor alone makes the dividend that much more secure. If you feel so confident in the company that's going to be around for pretty much the unforeseeable future, then it's a safe investment to make, and it does not require as much research as a little known tech company that is very small cap and very risky. Am I saying not to do any research? Absolutely not. There are companies that have been paying a dividend for 30, 40 years, and now their dividend seems rather risky compared to other dividend-paying options. And there are some companies that pay a dividend that, for the past 5 years, that look better than companies that have been paying them for 30, 40 years. You have to do your own research and see which companies work best for you and make you feel the most secure when investing. However, I would still argue that these companies do not require as much research as, let's say, these small tech companies that are more volatile. So it would be easier for you as an investor not to be required to research as much into your stocks. You can just throw your money into a select few stocks of your choosing and feel confident in doing so. Reason number 3, when the stock performs poorly, you still win. When a stock decreases in price, it does not necessarily mean that its dividend is going to decrease in price. If you pick the right dividend-paying stocks, the dividend's going to either stay the same or increase as the stock price is falling. If you were to reinvest these dividends into the stock, so buy more shares with these dividends, which I recommend everyone to do, you can buy more shares with those dividends than you were previously. Let me give you an example. Let's say you want to buy a stock for $100 and it has a dividend of $3. That means the yield currently is 3%. Let's say that stock drops to $50 a share. You might start freaking out, but then wait, hold up, the dividend's still $3. So that yield now is no longer 3%, it's 6%. So what can you do? You take that $3 and you buy the stock priced at $50, even though you bought it at $100 originally. It's like a Black Friday sale. It's 50% off, and now your dividend can just buy you more shares of that stock. And then when the stock price inevitably recovers, you will have more shares because you reinvested at such a low price. This makes you a tremendous winner in this situation because you didn't sell too early and you were able to benefit when the stock hit an all-time low. If the stock didn't pay a dividend, you wouldn't benefit in this way. Instead, if you bought a stock at $100 with no dividend and it dropped 50% in value to $50, you would probably be absolutely terrified and you might even consider selling it because there's no positive to holding a stock like that. However, with a dividend, you can always look forward to being able to reinvest and buy more shares at a discount. All this talk of reinvesting leads me into my 4th reason, which is probably the most important reason. Dividend investing allows you to feel the benefits of compound interest. By reinvesting your dividends, you can feel the tremendous returns of compound interest. Let me give you an example. Let's say you invest $1,000 in a stock giving you a 3% yield for 40 years. On average, you get a yearly return about 8%. By just reinvesting your dividends and experience that 8% return a year, that $1,000 will turn into $30,000. However, if you did not reinvest your dividends, that $1,000 would have turned into $21,000. Imagine if it were $1 million to invest instead of $1,000. That difference is tremendous and it shouldn't just be overlooked. Reinvesting your dividends, especially with compound interest, allows you to really increase your returns tremendously. And it's a very interesting and very important reason why you should start dividend investing. So yeah, dividends allow you to expedite, speed up, increase your returns over the long term. And reason number 5 is dividend-paying stocks provide a source of income that can really benefit you for financial independence. Dividends provide a steady, stable source of income for all investors. Regardless of market performance, if you invest in the right dividend-paying stocks, that dividend's coming. They're going to pay it no matter what. Thus, in a way, it becomes a never-ending income stream as it'll be paid regardless of the circumstances in the market. And if you invest in companies that consistently grow their dividend, it is a ever-growing source of income for the long term. And I'm just going to throw a bonus reason in there. So it's going to be 6 reasons. And I think the 6th reason is the upfront cost to actually start dividend investing is so low. Unlike real estate, where a down payment can be anywhere from $20,000 to $100,000 for a property, dividend investing, you can start with really as small as $1 now, because you can use fractional shares on most trading platforms. So with as little as $1, you can start building a source of passive income that'll set you up for the long term. So let's summarize. Historically speaking, dividend stocks outperform the rest of the market during economic downturns. Dividend-paying stocks tend to be very reputable, blue-chip companies that do not require as much research as more volatile companies. When dividend-paying stocks perform poorly price-wise, it allows you to reinvest and buy more shares at a discount. Compound interest is probably the best way to accumulate wealth in the long term, and it'll really set you up for retirement later down the line. Dividend investing can lead to financial independence for the rest of your life due to it being an ever-growing and ever-paying income stream. And for that bonus reason I spoke about earlier, dividend investing does not require a huge upfront cost like other passive income sources, such as buying a rental property. So it makes it perfect for beginning investors. I hope you guys enjoyed the video. I hope you guys got more of an appreciation for dividend investing. Maybe you didn't. Let me know in the comments below. Are you going to start dividend investing? What's your favorite dividend stock? I would like to know all that. So leave it down below in the comments. If you liked the video, drop a like. Destroy the like button for me. I would really appreciate that. And subscribe to the channel. I'm going to post more content like this going forward. And hopefully it was helpful. Hopefully it was informative. And you got something out of this video. So yeah, thank you guys for watching. Check out all the links down below in the description too. My website's there too. I think it'll be cool to check out. But yeah, until next time, I'm Anthony, and I'll see you later.